Hello, everyone. Welcome to Smart Investing. My name is Albert, and today is October 23rd, 2024. This video is going to be about the parts industry for the automotive and truck industry. We're going to go over five stocks, and these are the five stocks that we're going to go over. We're going to start off with ticker symbol DORM, Dorman Products. So, first ticker DORM, also known as Dorman Products. Market is open for now. We open for the next till 4 o'clock. So that's about 2.5 hours. So if you see some numbers moving, it's because the markets are open. 5-year chart. Let's look at the basics. So for this is a profitable company. We're looking at this at $5.46. Nothing for dividends. 52-week high and low. Has a good range of about $60. We're looking at the volume, which looks pretty inactive at 30,000. Market cap is about 3.5. Decent looking company. Wall Street likes mid-cap companies, so we'll see how that is. For the last year, market has been trending up. We see here, and then it's gone flat, and then it's gone up again. Then you have these little periods of up and downs. So for the most part, it's on a uptrend. We're gonna look at some financials real quick. We're gonna look at the annual results. 2023 had almost 5.5% in return on assets. Return on equity, they had about 12%. Earnings were about 4, so at least $1 per quarter. Margins are at 6.7. Debt levels are at 50%. So debt levels have slightly been decreasing, which is good. Other than that, net income at 129.26. Revenue at 1.93. Balance sheet, again, 50% for the liabilities. And then we have the cash flow. We have 208 million in operating cash flow. For investing, they used up about 44 million. And then 174 million in financing. So that's almost a break even in cash flow. So the net income is positive. Cash flow, it's like break even. Dividends, they paid a little bit of dividends here. Last time they paid a dividend was 2012. And for this company, is it a good company or not? I'm gonna say maybe. Yes, it's on the uptrend. Is it in demand? Sort of. I mean, cars are pretty much in demand. I'm gonna say not available as of right now. For overall, again, not available. The volume needs to pick up. Market cap ain't bad. This has to be evaluated at a later date. I mean, for long term, yeah, seems okay, but the mover has already been done for the year. And we're in the presidency for the elections, so I don't know how that's gonna go. It might, uh, influence or take effect as to what industries are gonna be good and not. So, not too sure about that. Next one up, Isuzu. So no volume. That's pretty horrible. So this is definitely not a growth stock or not an active stock. Pretty flat. Looking at the chart, earnings are at 1.4. Dividends have been paid out at 0.59. So pretty much half of what they are earning is being paid in dividends. Uh, Looking at the financials, we're gonna look at that. Net margins at 5%. Debt is at 50%. Net income is at 221 billion. 3.39 trillion is the revenue. I doubt this is American US dollars. Again, this is an over the counter stock, so this isn't the Japanese yen. As for this company, it needs a lot of work. I'm gonna say no right off the bat. It needs to uh, have like better debt, and then also needs more activity. So obviously, over the counter stocks, I'm not fond of them. So this one had a no decision, and this one I said no. Next one up, ticker symbol CYD. CYD, right off the bat, it had its up and downs. 2022, then it kind of got a W here, and then went down again, flat, went up. So it looks, I don't know, it looks very volatile. Market cap is only 461 million. Not a huge market cap stock. Not something that Wall Street likes. Earnings are positive. PE ratio is at 10, so it's undervalued. Again, the market cap for me is way too low. Not even $1 billion company. Going over financials. Hopefully they have something. Let's skip to the margins. It's really low. Earnings aren't too bad. That needs to be better. Looking at the net income at 422 million, then the revenue is at 18 billion. So for this company, you know, market cap versus revenue, it's totally different. And these are just major numbers. If this was like a $15 billion company, then yeah, it might look different. People might actually like this stock, but it needs work. It needs a lot of work. The debt ain't too bad. Cash flow, we're gonna look at that, and cash flow is actually not bad. But in order for them to grow revenue, this is a Chinese company. People are not fond for a Chinese company here in the U.S. So for this stock, I'm gonna say it needs work. So no to this company. Got two more and then I have to get going. Ticker symbol SMTOY. SMTOY at $12 billion company. Not bad on market cap, but volume is pretty bad. Over the counter stock, something I don't really like. Net margins, we're going to look at that for the annual. So 3.4. That's the best they had in the last 5 years. So still pretty low, but I guess that checks out. People tend to like growing margins. Debt 44%, not bad. Looking at the net income, 168 billion, 4.4 trillion. This got to be in a different currency. So again, another one that's in bigger currencies, 44% liabilities. So basically their debt. Operating cash flow at 393. So almost 400, and then you got 120. So looking at 380. So pretty much almost break even on their cash flow. I don't really like over-the-counter stocks. Volume is pretty bad, so I'm also gonna say no to this company. Just because also it needs work. It's over-the-counter, and yeah, their margins they're growing, but they're still pretty low for their net margins. A 10-cent stock. Yeah, I'm not liking this. No room for growth. Volume is not even active. Pretty horrible. Earnings are negative, so this is definitely a stock that is no use to anyone. I don't even think I should even go over the annuals. So net margins are in the negatives. Like these are huge margins in the negatives. I don't know how a company can still be in business after looking at these numbers. Debt, it's over 100%. Like, it's a horrible company. Horrible company. Yeah, I can't even bear to look at the cash flow. So negative 52 million, then investing, financing. So negative 20 million at least in cash flow. Definitely a bad stock. So with that said, $2 million market cap stock. That's all I have for you guys. Thank you guys for watching, and I'll see you guys in the next one.